Man, it's all perception, right? 20 lots, 44,000, 2 lots, 4,000, 20-cent lots, 400, 2-cent lots, $40 over the course of the week. So basically what we're going to go over is we're going to go over the entire week. We had last week was one of the best weeks we had so far. Did around $44,164.74. This was on a $100,000 account. So what we're going to do is I'm going to go over each and every trade which I took, why the trade was taken, where was the stop loss, where was the take profit, what was the complete breakdown of why these trades were basically taken, right? So what we're going to do is we're going to start off with the first trade, which was a GBPJPY buy with 15 lots, did around $1,513. So let's take a look here. So the first trade was on Sunday when market opened. This was taken at 135,628 before the Asian open. So what was happening at this point was what we're going to do is look at that right now. So this is where the market opened, right? You see the time down there, times is 1700 hours. That's 5 p.m. Eastern. Then the candle started forming, and then we got to wait till closer to, like, pre-Asian. This was the pre-Asian time, 6:30 p.m. Eastern, and then we move into the 7 p.m. Eastern. This was the 7 p.m. Eastern time right over here. So basically this was a support forming. So once we had support formed here on Friday, the market closed, and then once this candle closed bullish, then we waited for this candle to close, right? When this candle closed bullish on the 30-minute chart, this gave me an idea that, okay, maybe now price is going to continue up towards, 135, 840, 135, 830, which is like 20 pips away. So basically the trade was taken right over here. It was a long position. It was taken at 135, 628. The stop loss was kept below the previous candle, and the TP was expected to be 135, like 830. So you can see here, this was taken at 135,628. Took another entry at 135,662, right? So we had take profit at 135,735. Decided to take 10 pips as price came up to this area, because when I saw wicks, these wicks as form of rejection. So 135,735 took profits here, and then the second position got stopped out at break even. Next we have the GPJPY 2 lot that was open. This was opened. This was opened from last week, right? This was open from last week, which got stopped out, whatever, right? Next, the next trade which I took was a GPJPY buy on 5 lot. This was taken in New York sessions, right? So we're gonna take a look at the New York session right now. So this is the area right here. So this is 6 a.m. Eastern. You can see once this candle closed bullish, we were forming a support. Overall, the high time frame trend was bullish, so obviously we were looking for buys at the time. Once this candle closed bullish, the 30-minute candle, and when this next candle started retracing, you can see the price there, right? 135,432, somewhere right over here. 432 is right. This is where the trade was taken, and the stop was basically kept. So let's take a look at this, right? 135,432. The stop was, now I didn't put the stop below the candles. Usually, like, it's very normal to place the stops below the candles, but in this case I placed the stop somewhere in the middle of this area here, because my whole thought process was that, okay, if this candle is going to go bullish, it should not come all the way down over here. It should at least, like, respect the midpoint of the previous candle and continue moving bullish. So once I took the entry at 135,430, my take profit was this area right here at 135,670, because, as price would break above this area with pre-New York volume, it should continue up towards this area right over here. But I ended up taking profits earlier, which was at 135,613. So 135,613, somewhere around here, we took around, maybe like 18, like 15 to 18 pips right over there. But as soon as this candle closed, the bullish candle closed, my stops went to break even, right? So in this case, now when stops are at break even, man, sky's the limit, right? Or until you get stopped out. So in this case, I took profits and profited around $858.96. That same day, took a sell on gold as well with a 5 lot. So we're going to take a look at that right now. Now, a lot of people are just watching this to see, okay, yeah, let's see what he did. But if you actually listen and make notes, you're going to learn a lot of things over here, right? So this was a sell taken at 1935.51. Let me just make this a little bit broader, and let's bring this back up. Okay, awesome. So this was taken at 1936.51. Let's take a look at the price, right? Let's take a look at the time here first. This was closed after NY opened around, 8:11 a.m. So basically, the whole idea of this sell was that, okay, we formed support on gold. Gold was bullish, right? High time frame was bullish. So once this candle formed here, this small bullish candle on 15-minute time frame, a small bullish candle does not necessarily mean price is going to go up, because you need some more stronger confirmation. So once this candle started breaking the low of the previous candle, now you see that, okay, we broke support, we broke the low, respected the high. What's the probability of price coming down towards this support at 1932? I think the probability is going to be pretty high, right? So I took an entry at 1936.51. Actually, I wanted to take an entry at 1938, but I got slipped. I got slipped by 20 pips, so executed at 1936.51. If you look to the right-hand side, you'll see the price there, 1936.51. This was where the execution was. My stop was around like 20 pips. Price dropped down to 1933. Actually, I took profits at 1933.87 because as price came down into this area here, now when you look left, this was a consolidation, right? This was consolidation before price moved up. So when this candle was coming down, the candles are looking left, man. Candles are looking left, and the candle is saying, hey, listen, my buddies were consolidating here before, so maybe this is going to be a good area to maybe exit the position because candles might start retracing or whatever, because it's really, really important to secure profits. Securing profits has been my key in 2020, and that says, man, amazing results so far, right? Secured profits around like $1,320, and then the next trade was the next day in the Asian session before Asian Open, same time as the last day, right? This was a buy on GPJPY. Let's take a look over here. So this buy was executed at 135.642. If you look at the price at the right hand side, now the whole idea was that, okay, this is the time. This was the Asian Open right over here, right? So before we came into pre-Asian, before we came into Asian Open, had to see some sort of levels. It's really important. So when I look left, there was a support forming at 135.640, and this support was formed at New York close. So if New York close respected this area as support, there was a very, very high probability that the price was going to continue going up. So once this candle closed bullish in the 15-minute time frame, this gave me some sort of a confirmation that, okay, with the higher time frame daily being bullish, we might continue going bearish. Now remember, the key here is the high time frame being extremely bullish on GPJPY. So this was executed at 135.642 as this candle started retracing 135.642 somewhere over here. So the stop loss was kept at below the previous candle around here, and the take profit was all the way up towards 135.779. Now as price started to come up, I started to get a little bit antsy, right? Because once this candle started going up, it looked left just like we saw before. There was a bit of a consolidation here. So whenever there's consolidation, price might start consolidating there. It might start rejecting there. So if you see, I took an exit at 135.720. So 135.720, this is where I took exit. I think I got like what, like maybe 8 pips, 9 pips, something like that out of it. So back around $370 profit and 21 cents. Now, at the same time, if you look at the next trade was the gold sell. Now this sell was running at the same time as the GJ buy was running. So we're going to take a look at that right now, why that sell was taken, and increase the lot size at 20 lots as well. So let's take a look here. Now, this was something extremely risky, right? The only reason is because, as gold was rallying up, as we were moving towards the Asian Open candle, so this is the 5-minute chart, right? When this 5-minute candle closed bearish, it made a wick on the top and it made a wick at the bottom. So I was like kind of guessing that may continue moving down because, it had already moved up. So for the 1-hour candle to close, the 1-hour candle has to retrace a little bit, right? Because if you look at the 1-hour candle, the 1-hour candle was all bullish and we were coming up to a close. If you look here, there were only 10 minutes left. If you look at the time at the bottom, there were 10 minutes left. So my idea was that, okay, if I got a one bearish candle closing, what's basically the probability that the next candle will also close bearish as well, indicating that okay, now the 1 hour candle has to make a top wick. So the sell was executed at 1964 1964.33, and then it was closed at around 1963.04. If you look at the price on the right hand side, and if you look at the trade itself right over here. So if I can make it much more apparent, the way it's going to look like, it's going to look kind of like this, right? So 1933 and 1934, 1964 and 1963, somewhere right over here. Now, if you're wondering where my stop was around 10, 20 pips. That was my stop. I was ready to take a loss. I was already up from the gains of July of the previous week. The first 3 weeks of July, I was still up. So it's kind of like leveraging those profits to see if I can make more profits with strong confirmations here in the 5 minute time frame, right? So this trade was closed. It worked out, came down, took around like 12 pips, 12, 11 pips with that, and then later on took a buy position on gold. Now, the reason that buy position was taken was at this level here. All right, so at this level here, this is where the buy position was taken, somewhere over here, 1972.74. If you look right, 1972.74, somewhere over here. The whole reason was that, okay, now since the sells did not work out, right? So you see, this is where somewhere here the sell was taken before the Asian Open. Price kind of like did what it had to do, and it went up and made a high at 1980. Once this high was formed, we all know that, okay, whenever price makes a high or whenever price makes a low, there's an 80% chance that high is going to get retested. So this was the high made at 1980. What we had to look for, some sort of a support forming, or even some sort of a confirmation that, okay, support is being formed now. Now, what's the probability it's going to go up and retest that high? So if we measure now, this candle came down, this candle closed like a small bullish candle. This wasn't much confirmation here, but the buy I took was at 1972.74, which is somewhere over here, 1972.74, somewhere over here. The stop loss was kept below the previous bearish candle right over here, right? Because in my case, I was like that, okay, if this candle is forming bullish, right, and it should not break below the previous bullish candle, right? But since the previous bullish candle had a very small body, it was like almost like a doji candle, it means that nothing really happened in that case, right? And then the previous bearish candle was obviously bearish. So in this case, what's going on is that, okay, now you can tell, okay, well, if price is going to go up, it shouldn't break the low of the previous bearish candle. So this was actually a very, very, that high was actually very far. I mean, this was like a 80 pip range. That high was 80 pips away. But I'm a very conservative trader. I don't like to hold position for a very, very, very long time. I like to be in and out. So this is what happened here. So I took profits at 1974.45. So somewhere over here, 1974.45. Somewhere here, I took profits. But now someone may look at this and say, okay, well, he had a negative risk reward. But the thing is, when price went in profits, once we went in profits, I reduced my stop loss. I brought it up a little bit. I brought it up towards close to break even. So even if you have a negative risk reward right here, and if you're moving your stops up after you go in profits, now your risk reward becomes positive. So now the old days saying is, oh yeah, you need to have positive risk reward, this and that. I think positive and negative risk reward is what the 90% people use. And then, I don't know, I don't want to say anything, but at the same time, I think that risk reward is completely subjective. It's variable, it's subjective, it's based on where you really move your stop losses, right? So this was a buy taken here. It was still risky, but we made it work. And then we had a sell on gold taken at 1945. Now this was the biggest trade of this month. Made around $14,000. It was a sell on gold, and let me explain the sell to you. This sell was taken. Now I was eyeing for this move to break so we can continue heading down, but ultimately that did not happen. What happened was, let me just go over here. So once we come over here, now before we talk about that sell, let's talk about what was happening in this area here to our left-hand side, right? Let's do this here. We had this area here, and now, okay, perfect. So before price broke above 1945, price was ranging. Price was ranging between 1945 and price was ranging between 1931. So now this was a big range, right? This range was around like 133 pips. So my whole thinking was that, okay, if price broke above, if price broke above, and if price is going to come down, and if it's going to come below 1945, and if it's going to come in this range, there's a very, very high probability it's going to continue down to tap the bottom side of the range, right? So this was the whole mindset behind this trade, which went to like $14,240. I was actually shocked. I wasn't expecting this at all. So basically, this trade was executed at 1945 exact 1945, but price retraced. It slipped my position up, so gave me a better position at 1945.91. It got executed at 1945.91, and then it continued down. As it came below 1945, I was like, okay, you know what? We need to get rid of this trade. We need to close this trade. But if you look left, there's this clean candle, and then you got a minor support right over here at 1938.79, right? So if this is an area of support, now see right over here, look at this, right? Look at these candles. These candles came up, made a higher lows, higher lows, and then this candle, boom, broke below the low of the previous candle. So this is some sort of a problem area right over here. So that's why once price came down towards 1938, this is where I closed the position. I could have held for it to continue down to the bottom of the range, which was another 47 pips, which would have gave me around $20,000. But I was like, yeah, you know what? No, this is it. Have to be safe, have to be very cognizant of the fact that, okay, even though I know it can come down, but what I see, now here's the thing, what I think, it can come down. What I see is that there's some sort of a rejection in this area, which is why I closed positions at 1938. So this was one of the biggest trade I took. I mean, this month. I think this year, though, the biggest one was 36,000. That was back in February or March. I don't really remember. So let's go towards the next trade. Next trade was a GPJPY sell. Let's take a look at that right now. All right. The sell was executed before New York Open. It was executed at 135.494. Now let's take a look at the technical analysis on why this sell was taken. So basically, this is what was going on. Now, when we came to the charts, we saw that, okay, price made a resistance. This candle broke up. The New York Open candle, it actually broke up. Oh no, actually, no. This was not it. This was it right over here. Yeah, this was it right over here. So when we came through the charts, what we saw was that price has come down. So the reason I stopped there was because if you look at the time, this trade closed before New York Open. So we can't look at the New York Open candle when the trade was closed before New York Open, right? I mean, makes sense, right? So price came down. Price made a low at 135.388. Now, what we talked about before was whenever price is going to make a low or it's going to make a high, there's going to be a very high chance that price is going to retest that low or retest that high. So in this case, trend was bearish in this case. Price came down, made a low, came up. This is a 15-minute time frame. Candle closed bullish, right? But it's not a strong bullish candle. So ultimately, I was looking at sells because price made a low. There's an 80% chance price will retest the low. So the sell was executed somewhere over here around 135.494. As this candle broke the low of the previous candle, the stop was kept above the current candle because if it has broken the low, it shouldn't break the high and should continue moving down to retest the low somewhere right over here. And as price came down, you can see executed at 135.494 and took profits at 135.406, somewhere over 135.406, somewhere right over here, like before support was hit. And ultimately, I think this was a very, very good exit. Didn't hold to hope that may go down because if we did, we would have got the stopped out at break even or even in a loss. So it was pretty good. Let's take a look at the next trade here. Next trade was taken the next day. We skipped the Asian session, right? Asian session was skipped. So we moved to the next day. This was taken very early in the morning. So let's talk about that here now. All right. So the buy here on GPJPY was taken at 136.008. Now remember, the high time frame was bullish. We were moving up. we were rocking and rolling. And the reason why this buy was taken was because I couldn't sleep at night. You know, like I woke up early in the morning, and when I woke up at like around 4:30 a.m., I saw that price was ranging, right? And this was the range where price was in. So price was basically making a resistance at throughout, you know, the London session, and then we had a break up. Once this candle broke up above this consolidation, and if you look left, it broke above that resistance as well. Now this gave you an opportunity to, like, you know, for maybe price to continue moving up, right? So once price started to move up, I think this buy was executed in this candle right over here, around, you know, closer to 5 a.m., closer to the next start of the next 4-hour candle, right? So the buy was taken at 136, 136.008. The stop loss was kept below the previous candle, and the take profit looking left was somewhere around 136.200, because if we look left, this was the area that I was eyeing for price to come up to, because as price is moving up, we need price to move up to this level here. This is an area of resistance here, and the next one we have at 136.365. So as price started to continue moving bullish, let's just look at that right over here. So this was a take profit right here, 136.200, and you can see how price rejected that area multiple times there as well later on. So the entry was taken at 136.008. It was taken profit at around, you know, around like before the live stream started, around 136.174. So we kept this in, this kept in, so around 6 a.m. 136.174, closer to 136.200. Because now remember, whenever you have take profits at like strong zones, it's better to take profits before price reaches the strong zone, because you never know. You never know, price may reject that strong zone before moving there. So it's really, really important to continuously secure your profits. That's where the profit was secured. Had another buy at 135.804. This was a swing trade taken based off of the 4-hour here, because, you know, we wanted price to continue heading up, and that buy was executed before going to bed. I think it was like after. Let's take a look here now. Okay, had to pause here a little bit, so that's why you see a little cut, because I had to pause to like really see what was happening. So these were buy stops. This was a buy stop at 135.800. This was a buy stop somewhere over here, and then the second entry was taken at 135.865. Around, you know, like 4 a.m., because we anticipated price to continue moving up, and stop loss was kept within this consolidation, because when price is broken above consolidation, it should not come back into consolidation. It should continue moving bullish. So obviously the daily candles are also bullish, so, you know, the high time frame was bullish, and if you can see here, the take profits were taken at the same time. So 136.174, 136.174 again, and 136.167. Right now, the next trade was taken the next day that we're going to look at right now. When price was ranging here, this is where the entry was taken at 135.928 when price was consolidating. This was a 15 lot. 15 lot was open at this point. So once price broke above this area, the stops went towards break even. So 135.928 stops went to break even, and after that I was like, okay, like, you know what, we'll secure most positions at 136.174, around 136.200, and let the last one run. So the last one, the 15 lot, it ran up to $5,700 profit. This was closed at 136.328 when the market closed, right? Very important. Now look, take a look at the time at the bottom, right? We're moving in 5 a.m., 6 a.m., we're moving into 10 a.m., and then we're moving into around 5 a.m. right over here. As soon as the market closed, when spreads jumped up a little bit, I decided to close the position, because I thought, hey, like, you know what, this is the right position to close, and I think, like, you know, maybe price may start retracing after this, you know, because I want to secure the bag. So this was the runner that ran for about, you know, like 30 pips, I'd say 30, 40 pips. So this is around 136.328. So 136.328. So price was right over here, but when I closed, the spread was so big, I lost a bunch of pips here too. I think I lost like $100, $200. It's all good, right? So that trade was closed right there. These are the swing trades. So analyzing swing trades on the 4-hour is much better rather than on, like, you know, the 15-minute daily. Maybe next time we can probably look at it in more detail. All right, let's take a look at the next trade here. Okay, the next trade was actually a loss. This was a buy on GPJPY, which we took. This was taken, again, before the NY open. So let's take a look at that right now. Okay, so I don't even know why this got stopped out. I wasn't really expecting it. We were bullish, took a buy. The buy was taken somewhere in this candle here. When this candle started retracing, so check this out, right? 136, 183, 136, 183, somewhere over here. I think it was a bad position, right? Because when I took this buy, this was at 136, 183 right over here, and the stop loss was all the way down over here, right? And when the next candle started coming down, it kind of freaked me out. So I closed half, and after closing half, I closed the entire position. So basically, oh no, I didn't close half. I closed around 4 lots, right? I closed 4 lots, and then I closed the rest 1 lots, in like, as soon as price came down to 136, and I should have stayed in this trade. But like, if this was MT4, you should have seen 2 positions. But since this is MT5, you only see a combination of the positions, right? Now, right after this trade, I gave the buy a second chance. The second chance entry was at 136, 158, which was at 136, 158 right over here, right? I took the bias a second chance because the high time frame bias was bullish. The low time frame bias was also bullish because if you can see here, this resistance was formed the previous day after London closed, and then this price came and broke above this resistance. Price broke above this resistance. This is a 30-minute time frame, by the way, right? The next candle closed bearish, right? So there's no bias because the candle is closing against our direction. The candle after that closed bullish, which gives you confirmation that, okay, now the support has been formed. So once a support has been formed, you can place a stop below that candle and anticipate the next one to continue moving up, which it did. We moved up to 136,300. When we moved to 136,300, this was the point where I took profits. Profits were taken at this point. At the same time, there was another position taken at 136, 142. This was a 10 lot. So a total of 15 lots were running in this bias to continue going up. Now again, the reason I started really maximizing my lot sizes because I was already up for the month. I was up for the month, so I was leveraging those profits to see if we can make some more profits off of the high time frame bullish buy. So if you can see here, the buy was taken at 136, 142, somewhere down over here, and the TP was taken around at the same time. Like the 5 lot buy was taken at 300, the 10 lot buy take profit was taken at 284, like somewhere down over here, because we looked left and there was some sort of a consolidation area, so kind of like saw that as maybe price may start rejecting or whatever the case may be, so secured profits there. Now the next trade, was taken at the same day. This was taken later on in the evening, at FOMC. When FOMC came, this was the FOMC sell on gold. So let's take a look at that right now. Now, this trade, was extremely, extremely risky, right? What happened was, now, if we're talking about interest rates, right, let's take a look at the interest rates right over here. Let's go to forexfactory.com and let's go back to last Wednesday, right? So they kept the rates the same. If they kept the rates the same, this means this is good news for the US dollar because there's no change has been done. They didn't reduce the rates. If they would have reduced the rates, gold should have shot up to 2,000, but it didn't. They kept the rates the same, and once they kept the rates the same, gold started to move up. So if you look at the price right here, we started at 2 p.m. At 2 p.m. we dipped down 44 pips, and then we moved up 190 pips, almost 200 pips we moved up. So in my mind I was thinking that, hey, wait a minute, if the rates are kept the same, gold should be coming down. So I needed to look for that confirmation for gold to come down, and the only confirmation I got was on the 15-minute time frame where we had a candle closing with no wick on the top. There was from a technical perspective, candle closed with no wick on the top, so there's a very high chance the next candle can continue moving down, provided the rates are kept the same. Which the fact is the rates were actually kept the same. So this was a very, very risky sell I took. It had a mental stop loss. I was almost not going to talk about this trade, but I guess I will. I don't expect anyone to do this, right? Whenever you take a trade, always use a hard stop. I was being risky with this because I've seen this happen a lot of times. I've seen this happen. I've experienced it. I have lost in these trades as well. So I was trying to give it a shot because I've learned from those losses. So this was a risky trade and it paid off. So the entry was taken at 1976.62, somewhere over here. The stop in my mind was around like was around, I would say, like 15, 20 pips. The spreads were really high at that time too. So I was really looking forward to, like, really, if it starts moving down a little bit, I'll take profits and call it a day. So if you look here, the exit was taken at 1974.28. So we entered at 1976, exited at 1974.28. This was a small 20 pip move. Could have held it much more longer, man, but hey, it's gold. You you never know. You never know. So that was the exit taken. Now the next trade was taken the next day. Obviously, next day was taken next day. This was taken at pre-New York on GPJPY. This was a buy. This was a buy at 136,635. Right. Before we talk about that buy, we have to take a look at the high time frames, and we need to understand why this buy was taken, or where was GPJPY headed, right? So if we look to the left-hand side, this is the area where GPJPY was coming up towards, right? 137,400. This is based on the 4-hour time frame deal. So the entire bias was based on the 4-hour for price to continue moving up and ultimately coming up towards 139, right? So the bias was for price to come up. And if you can see here, if you look left, price rejected this area. And now if we look right again, price came up and rejected it again. So now once you go down to the 15-minute time frame, it gets kind of easy to see where those buys were taken. And if I kind of like zoom in over here and now try to find that again, it was somewhere over, okay, right here, got it, right, right over here. So once this happened, now 136,635, right, 136,635, somewhere over here. So this was a resistance formed. This was actually a resistance. 15-minute candle broke above. You had the next 15-minute candle closing like a small bearish candle. No indication for sells because candle is bearish. The candle is bearish above a resistance turned supports, right? So there's no sells. There's no buys either because the candle is bearish. The next candle closed bullish. Okay, could have taken sells at that point, but I was also being very, very cautious, because this was a Thursday and I didn't want to take a loss on a Thursday. I wanted to be really, really safe. So when the next candle closed like this, now if we go down to the 30-minute time frame, looking at the 30-minute, what we see is that the 30-minute candles were making high highs and higher lows, and we had a target at 136 and 137 coming up. So now you have to understand, what's the probability price will continue moving up? I think there was a very high probability price was going to go up. Like, everyone took buys. This was actually also done on a live stream as well. So when price started moving up towards 136,635, that's where the entry was. So the entry was taken somewhere over here, and the stop was kept below the current 30-minute candle, because if the first 15-minute candle started forming bullish, right? So if you look here, this is the first 15-minute candle of this 30-minute candle. This is the second 15-minute candle. So if the first 15-minute candle closed bullish, what's the probability that the overall 30-minute candle is also going to go bullish? Because, man, listen, I don't know what you've learned about like Fibonacci's or whatever, but I mean, price action, man. Candles. If you can measure where the next candles are going to go, that's it. That's your trade, right? And then the buy was taken at 136,635, somewhere over here. The stop was kept below the current candle, which is somewhere 136,635. The stop was kept below the current candle, and we anticipated price to continue moving up. We also talked about this on the live stream too, because the conservative stop was aggressive stop was right here. Conservative stop was right down over here, right? And then the exit was taken obviously like after like 15 pips at 136,788. So 136,788, that's where the exit was taken, and then ultimately price started to continue moving up, and it is what it is, right? So this was the whole week. This whole week was an amazing week for $44,000 and $44,164. Every trade was broken down. Most of these trades were taken on the live stream, but the analysis was always given out. I hope this was educational. I hope we all can learn from it. New month is starting out right now. If you took losses in the last month, remember, this new month is a fresh month, right? So hope everyone has a great day. Hope everyone has a great week and a great month, and we'll see you on Monday. No, actually, Monday's holiday. Tuesday at the live streams. Ciao.